The conversation this month has been on non-interest finance and the journey to sustainable financing in Nigeria. Today on the show, we're honored to be joined by a distinguished leader in the Nigeria's non-interest finance sector, someone who has and is still playing a crucial role in promoting the growth, innovation, and regulation of non-interest financial services across the country and beyond. But before then, hello and welcome to Islamic Finance Weekly. I am Rahma Say Muhammad. Ladies and gentlemen, join me in welcoming our guest, a person none other than the President-elect of the Non-Interest Financial Institutions Association of Nigeria, NIFIAN, also the Chief Executive Officer of Trust Arthur. It's a real privilege to have you here with us today, Dr. Basheer Oshodi.
Thank you very much, Rahma. Thanks.
Thank you for joining us. Thank you for coming to the studio to do this with us. To start with, can you briefly share how you see the growth and impact of non-interest finance in Nigeria over the past decade?
Hey, thank you very much, Rahmat. So basically, Islamic finance started, what we call non-interest finance in Nigeria, started as something rather organized rather than some kind of fluke, right? And that's because way back 2009, there was a setup of the non-interest finance working group led by FINA, the DFID and Bill Gates sponsored entity. And at that time, what we tried to do was to put in place necessary, what I call infrastructural framework, or infrastructural regulation that will allow the industry to exist and exist very well for that matter. So again, all the regulators were there, try to come up with, guidelines, regulation, changes, tweaks here and there to ensure that, everything works well. They came in as observers at that time. And thereafter, the next thing was then to start to see the emergence of, these financial institutions, starting with the banks. So in the beginning, way back 2011, the first non-interest bank and the first non-interest banking window were licensed by the central bank, which was a fantastic thing. And of course, thereafter, a few more banks have been licensed. At this time, we're aware that at least you have five standalone Islamic banks and one window. One of the windows became standalone quite recently. But that's on the one hand, right? On the other hand, you then see that for the asset management bit, so the fund management companies, there's a massive, massive growth from just barely one as of 2009 to over 7 right now. Aside the fact that a lot of regular fund management companies are also then offering Sharia compliant products. And beyond that, you're seeing trustee companies, right? You're seeing the trustees coming out with products, Sharia compliant products. The conventional asset management companies coming out with Sharia compliant products. Right. More interesting, Takaful industry is also picking up very quickly. We have at least 5 standalone Takaful companies. The growth of Takaful industry compared to the insurance market is better, right? For the banks, we're catching up, we're still at 2% of the market. It looks slow, but looking at where we started from to now, we see that that growth is consistent. But if you then look more critically at, say, the return on equity, the return on equity is better for the non-interest banks because the return is giving you about 10-15%. In terms of overall growth, while the return on the conventional space is between 5 and 10-12% thereabout. But specifically, return on average equity is very, very good for non-interest banks. I'll say average of about 40%, which is lovely by any global standard. And so when you start to see that consistent, sharp growth, it then gives you a feel of what the expectation is going to be. Right. So let's look at Sukuk market, for example, which has been fantastic. Again, with the federal government Sukuk of over $1 trillion naira now. Right. The truth is that it can be better. If you look at the conventional space, yeah, they're probably doing another 2% of what they're doing. But $1 trillion for starter isn't bad. If you look at the private Sukuk markets, we've done barely 100 billion, right? Compared to the conventional one that is much more. Right. These guys have invested over 14 trillion, conventional bonds, right. That how much more the government one, which is much, much, much larger. But again, I think the idea really is the more you have players, the better the better innovation you have in the market, and of course it then goes consistent growth. If you look at, so on the asset side, yes, the size now, again, is barely 1.4 trillion. Still looks small, looking at just a handful of banks. But again, we envisage strongly, that within the next 12 months or so, we're going to be having another 5 standalone Islamic banks, or non-interest banks in Nigeria. The type of companies will increase. The asset management companies are, of course, increasing aggressively. So unlike the global market, where you have the banks ahead of the capital market, in Nigeria, I can see the Sukuk taking the lead, followed by the banks. And so what I envisage is that in a very short while, you're going to see a lot of commercial papers and a lot of private Sukuk, that of course that are PENCOM compliant, that will then, if you like, swallow up the market. Right? Yeah, you can agree with me that in Fund 6, the funds, the Fund 6 that I have right now is a lovely thing. However, the funds again just barely 100 billion, compared to 24 trillion in the conventional space, right? But what you're going to be seeing shortly, you're going to be seeing a massive movement of funds, especially where the non-interest financial institutions can start to have products that are fully PENCOM compliant, and that's the drive right now. And so with such, we then envisage a lot of cash moving into the if you like, into Fund 6, from the non-interest banking space.
Absolutely. Thank you so much for that very concise and brief introduction and the journey of non-interest finance. So talking about non-interest finance, which is often described as, naturally aligned with ethical and sustainable principles. In practical terms, how is the non-interest financial sector contributing to Nigeria's and the world's sustainability agenda, some of which are to end poverty, gender equality, climate action, zero hunger, and the rest? How do you see non-interest finance making an impact?
Okay, so naturally, non-interest finance is on the broad foundation of the Makassid Sharia. The Makassid basically is anything that makes people happy, communal goodwill, and all of that. And of course, then seek to protect 5 things, intellect, life, faith, prosperity, and of course, wealth, right? In places like Malaysia, they measure the Makassid very seriously, they then fit the elements of the Makassid into the Sustainable Development Goals, right? So whatever you have the Sustainable Development Goals right now, for me, I would say it's a kind of offshoot of the Makassid. But more specifically, there are economic prescriptions, right? Starting from the Washington Consensus, right? Into the Structural Adjustment Program for certain economies, right? Into the Millennium Development Goals. All of these goals, we call them economic prescriptions. If you know what I'm saying, right? However, what has then happened is that such prescriptions have then also been passed to us. So we can argue from the quantitative approach and happily say, oh, we're not doing badly, people are out of poverty. But we can also look at it from a rather simple qualitative approach and just say, hey, zero hunger. I mean, how possible when the social, political, economic infrastructure that requires certain economies to emerge and develop well are absent. Either they are absent or they are shaky, they're not certain, they're not firm, right? So it means that the foundation of our economic growth pattern is so weak they cannot carry the load on it, right? And so because of that, it then affects the ability of the country, certain economies, including Nigeria, of course, to grow effectively, to grow well. It's like a sick child that is hungry. You want that child to run. The child is going to struggle, right? So that sickness is there on the one hand. On the other hand, we don't want to fix it to say, okay, how do we achieve zero hunger, which is or zero poverty, and all of that, which is I'll call it a prescription on the back of a weak structure, right? So to answer that question, we then start to look at, the overall macroeconomic rules in the country, right? There's what we call predictable surprises. That is the surprise that will always come, increased inflation, increased cost of funds, and FX and all of these things. On the back of that, of course, the inability to produce. So we're consuming more than we're producing as a country, right? And then you still have, gender inequality, right? Women are still being marginalized, believe it or not. Either it's in the workplace or it's even at home, right? So your question then is, how can non-interest finance fit into this? So when the country is defective in this area, it means that macroeconomic issues will then also be affected, right? So you can argue that for the conventional space, it's not doing badly. The banks are trying their best, of course, making a lot of profit at the same time. Have we really then addressed those concerns around this issue? So let's be more specific now for non-interest financial institutions. We then need to be looking at one or two or three areas that if you want to do anything renewable, maybe you should think of non-interest finance, right? Just address one part of the sustainable goals, right? If anything that has to do with gender equality, everybody should just think that, the non-interest banks, they align with the Mercosur perfectly well, they're going to be the ones to do this. That's the state we want to be at, And when it comes to education, I'm sure you know that, I don't want to go into the data, but I'm sure you know, you still have over 20 million children out of school, apart from malnutrition, all of these things. You want a case whereby 2, 3, maximum 4 of these development goals are being owned, by non-interest financial institutions. And so that's the destination. Again, a lot of plans are, on such. But more importantly also is that the kind of funding that you then require to sincerely touch all of these areas cannot be debt. Cannot be expensive debt. It cannot be. So it then means non-interest financial institutions will then have to look at unique funds that you can use to address all of these concerns. Again, just picking 2 or 3 or 4 of these areas. And I think that's a feature, and that's what must be achieved in good time. So that we can then start to measure performance. To say, okay, within a certain period of time, poverty has reduced. Looking at the breakdown from the Mercosur, right? To say on the back of all of this, we'll be able to tick a few boxes. Children out of school have reduced. Women are living better lives. Let me give you a typical example. Somebody died, a few wives, and they're not surviving. The society doesn't recognize them. It doesn't matter what religion they're practicing, but they cannot even go to a conventional or non-interest financial institution and say, hey guys, come and serve me. So that needs to be fixed. So until we start to fix all of that, we can then see the better beauty of non-interest finance. So I think a lot of efforts are towards that area now. And I believe strongly that we're going to achieve these things.
Yeah, absolutely. Thank you so much for that. Talking about weak structure and all of the, those factors, those sad factors that you've mentioned. We did Vox Pop last week and we engaged with people and asked people, do you think it's possible for, the country to have a system of banking where they don't charge interest? They give you loans where you don't charge interest. A lot of people were intrigued. They're like, it's not possible in this country, in this Africa. They went as far as saying, how the bank fund themselves, how would things be done? And then I told them, look, there is actually a banking system that would give you a loan, but without interest, rather than interest, profit. And a lot of them were intrigued. They kept asking, please, where can I get these banks? Because I have ideas in my head. I need help. But then the loans, the interest rates on the loans is very discouraging. I can't even do anything. So it's really, really sad. So now let's move to Sukuk.
Okay, can you allow me to respond to that quickly? Yes, so on the one hand, you have non-interest finance, which really is Islamic finance. You have the conventional finance. On the non-interest banking side or finance side, you have equity and debt. The equity is equity. You share debt, you share equity, you share rewards and of course losses. On the debt side, there's still a markup to it, right? So what I will prescribe for zero hunger, for example, or zero poverty, zero hunger, no poverty at all, if you like, is what you have as the Akwat model in Pakistan. In a model where zakat, sadaqah, waqf, interest-free loan, typical interest-free loan, Kodasan, are given to people to start business, to start life, such that over a very short period of time, they become eligible to even pay zakat themselves or to give out. So you need that system, that Akwat-like system that can then touch the lives of the over 50 million Nigerians doing nothing. right? So on the one hand, you have Islamic, which is Sharia compliant. On the other hand, we have within the Islamic banking space or finance space another model that allows you to solve these special problems, which I think would not quite start addressing at zero cost.
Right.
Yeah, so it means that in Pakistan, for example, this aqua structure is operated from social environments, if you like, the masjids, for example. So there's no operational cost as such, and they can then rely on a trust structure, which is not very common in the banking space to get a lot of these things done. So again, that's another place we need to move to as quickly as possible, just to respond to.
Yeah. Thank you so much for that. I mean, absolutely. I'm sure the viewers would appreciate that. So let's talk about Sukuk. I mean, you mentioned how the conventional space has done a lot of bond, like a lot of money has been invested in the conventional bond. So let's talk about Sukuk. I mean, we've seen countries like Malaysia and Indonesia issuing Green Sukuk. So it's, in your view, I mean, how ready is Nigeria for initiatives like Green Sukuk, and what role do you see NIFIAN playing in driving this market?
Okay. So Sukuk is a debt instrument. A debt instrument. At the back of my mind, I call it a glorified loan. Right? It's a debt instrument. Right. So because it's a debt instrument, it then means that it has to be well structured. It has to be enhanced. With guarantors, with underwriters, and all of the parties that can give it value. It has to be well rated, must have good rating. You must read the issuance, you must read the issuer, and all of that, right? To ensure. So on the one hand, again, federal government, Sukuk, everybody buys it because federal government, backed by the full federal government, right? If you do a private one, whether it's green or not, it must then have all of those, factors and analysis that makes it, viable. Because again, you don't want to lose capital, how much more profit, right? So in other words, Sukuk is a debt, right? It's a debt instrument. On the one hand, on the other hand, when it comes to green structures, they also have their challenges, their issues. You must have power purchase agreement. You must have those things that also makes them viable. Because you can go into some renewable energy transaction and can actually lose money based on the experience in Nigeria. Right. A power purchase agreement can be frustrated. Anything can happen. Right. And we have seen that in the market. So it then means if you're looking at Sukuk on the one hand and green, issuance on the other hand, you have to ensure that you minimize your risk as much as possible. So how did you do that practically? So for me, the first thing would be to refinance. I mean, as Sharia scholars say, no, don't use the word refinance, use the word, replace. To replace existing performing green transactions, either in the money market or in the conventional capital market. When you replace them with the Sharia compliant, because they're already performing, you then replace them, or you merge them together. So on the one hand, part of it is Sharia compliant, the other part is conventional. So when you start with taking transactions that are no longer in the greenfield space, you know what I mean, right? They're already existing. A lot of risk will have been eliminated. You're just coming in to reposition, to replace, and to ensure that they work. That must happen first, right? Again, there's nothing wrong starting a brand new one and getting excited about it, except of course, there's a major underwriter or underwriters that will ensure that these green issuances are fully not just compliant, but they're also almost at zero risk. Again, scholars can also argue that, but there must be an element of risk, And so it starts to be a lovely combination. Yeah, so like Malaysia and Indonesia, we're getting close. We've not quite done the FG11, I mean, at this time, but we're envisaging as such will come up shortly. But more importantly, you're going to start seeing, of course, NIFIAN, controlled or NIFIAN-led, issuances that will speak to such. So we envisage strongly that in a matter of time, that will expand. We've got some already. It's not like we don't have them. We actually have some. Exactly. But, they are too small. They're too tiny. When you put all of them together, they're still nothing, right? So let me give you a very simple example. There's a company that does, they take what do they call it, palm kernel waste, the shaft. They take it, they export it to Europe. That transaction can be expanded beyond limit. Right. Malaysia started with palm kernel, they started to build loads of propositions around it, including nice Tawaruk structures, right? So we're here to pick one or two or three produce that we're going to then capitalize on heavily and ensure that on the back of that, we can then conveniently have our green structures, right? Again, you have to integrate backwards if you have to.
Exactly. I mean, absolutely. Thank you so much for that. I mean, that's really enlightening. So to ramp up the conversation today, looking ahead, what key steps, what key steps should stakeholders, regulators, and financial institutions, and even the private sector take to ensure that non-interest finance becomes a major driver of sustainable economic development in Nigeria?
Yeah, again, with tariffs war going around now, you can start to feel strongly that, you realize that we can produce even cheaper from our free trade zone than China. And so you bring a team from China to produce cheaper from Nigeria. So the next question is, do we have import substitution and export promotion, products that want to push? What product or produce are we substituting that we don't want to bring in anymore to reduce our foreign bills, right? And what product or produce do you want to export to the market that will give us how much? My best case story is that of South Korea, where they have, the popular embedded autonomy. You look at the books of Peter Evans, right? Where you talk about the fact that a group of the best minds, will always ordinarily put together to take decisions and implement decisions, right? So to answer your question, we're then going to be concerned about how best to truly address this reality. Well, again, to be a little more specific, again, looking back at South Korea, where they looked at, agriculture, light and heavy manufacturing and services. Yeah. And they said, hey, where do we concentrate on, right? Let's do a lot of agriculture, let's make a lot of money from it. Let's substitute, what we should import with agriculture. But let's also produce so much. That was in 1943, into 1953, right? And then suddenly they said, no, let's move heavily into light and heavy manufacturing, right? Let's identify the markets we're going to supply. In Europe, in America, we can determine our income on the back of human capital only, no natural endowment, right? On the back of human capital only. And then it's okay for services. Let's blow up services so badly, so much, that within a very short period of time, our income on services will be at least 70% of our total income, right? That strategy, that storyline has not taken place, right? So to answer your question specifically, it means that NIFIAN needs to have a think tank, that will do the research and say, hey, players, you make a lot of money out there, but you know what? This is the result from research. These are the areas that we must concentrate on as a body, and as a kind of ecosystem to give us these expected results. The result that benefits us and that benefits the larger country, as a whole. So that is the destination we have to get to shortly.
Yeah, absolutely. Thank you so much for that broad and very engaging conversation. That was an interesting one. Thank you so much, Dr. Basheer.
A pleasure. Thank you very much, Rama.
Thank you so much for coming over once again.
Okay. Thanks, Rama Sheikh Mohammed.
Okay, thank you. That was an engaging conversation with Dr. Basheer Oshodi, the President-elect of NIFIAN, and also Chief Executive Officer of Trust Arthur. We saw how he took us down memory of the journey of non-interest finance in Nigeria, how Nigeria can tap into the market better to sustain every single person, how funds can be moved, and also how non-interest finance can benefit every single one of you. Well, with that, I would say, don't forget to keep it updated with us next week on the program. Follow us on all of our social media platforms displayed on the screen. Thank you for watching, and as always, I am Rahma Say Mohammed.